today I will be covering the basic of Bitcoin. Without any further ado, let's get to it. It all started in January 3rd, 2009, when the first Bitcoin block was mined, the Genesis block. This block contained a message: Chancellor on the brink of second bailout for the banks. This headline was chosen as a message and is indicative for why Bitcoin was created. You see, central banks, Federal Reserve or European Central Bank, print money whenever they feel like it. This is mostly done through monetary policy, which is called quantitative easing, where the central bank puts an electronic entry into the balance sheet in cash and then use this money to buy a long-term government bond. The government creates new money to purchase bond. Wrap your mind around that. Economists will try to say that this is not really money printing, but rather that it is an asset swap. Does this sound good to you? Does this sound like it's something we want? This is how inflation is created. And since the pandemic started, there has been inflation of maybe 20%, maybe 25%. I cannot say exact numbers. Possibly you doubt these numbers, right? Can you buy the same amount of grocery last year as you can today for the same amount of money? Of course not. Far from. What is really interesting is that the ex-Fed chair, Ben Bernanke, between 2006 and 2014, was stating that the commodity prices will not add to inflation going forward. What does that exactly mean? It means that commodities will not be included into CPI anymore. Why will it not be? Because it looked bad for the inflation. Let us review how Bernanke thinks. The day after the release of May's CPI, Bernanke blamed not just higher energy prices, but higher commodity prices generally for some of the recent pickup in core inflation. He noted that possibly future increase these prices remain a risk for the inflation outlook. This was stated prior the great financial crisis 2008. Does he actually believe no one would notice what's going on back then already? Satoshi Nakamoto, the person or group of people who created Bitcoin, does not trust the central bank, the government, or the system, and I believe it's time for all of us to stop doing that as well. Bitcoin is a decentralized peer-to-peer electronic currency with a long-term finite supply. Okay, so let's dig in. Bitcoin is decentralized, which means that this is not a central place. All the node operators, miners and users, all of it is decentralized. There is not central power of authority since the operations are distributed globally. Bitcoin blockchain is a chronological public record of transactions saved to time and shared by the Bitcoin users. The public ledger secures the history and ongoing use of verifying all transactions to prevent double spending. Bitcoin utilizes public key cryptography, proof of work, POW, and peer-to-peer P2P networks. The public key cryptography is what secures everything with the help of mathematics. This prevents anyone from spending or entering someone else's Bitcoin wallet. Essentially, it uses a pair of keys, a public and a private key. The private key is impossible to derive from the public key. There is a big difference between the public key and the private key. Your Bitcoin private key is generated in random when you first created your wallet. It is a sequence of numbers and letters. which enables funds to be spent whenever you want to send a transaction. This private key is impossible to reverse because of its incredible strong encryption code based within Bitcoin protocol. A Bitcoin private key will always remain mathematically related to the specific user and their Bitcoin wallet address. Public key is connected to the public address generated to receive Bitcoins. It is seen by everyone. It is made up of also a long sequence, also called a hash, that is compressed and shortened to generate the Bitcoin payment address. So a wallet is really only a device that stores your private keys and let you transact with your coins. It hides the information that you need to access your Bitcoin. The idea of this kind of wallet may be a bit confusing. You are not sending Bitcoins into a wallet and you are not downloading any Bitcoins, but it grants you the access to them. I earlier mentioned it was a peer-to-peer currency. Bitcoin are sent from one address to another address. Each Bitcoin owner can and should have multiple Bitcoin addresses. Take a careful note of this. Your Bitcoin address is the only information someone needs to pay you in Bitcoin, okay? If you want to invest in Bitcoin, you should learn how to do it as smart and secure as possible at once. You want to purchase a wallet, either a Ledger or Trezor is great options. I personally use a Ledger Nano X. You can think of multiple Bitcoin addresses similar to what you have multiple email addresses. One address for a certain purpose and another address for another purpose. When a transaction, TXN, is made, it is broadcasted to the network as it's to be found in the blockchain. The blockchain contains all transactions, so there can never be any double spending. These include a timestamp to log it in each block and then confirm it. Once the transaction is confirmed, it is broadcasted out to the network. All the Bitcoin miners and full node operators validate and see this. Lightning Network is 12,000 nodes strong. The Bitcoin miner, a complex computer, ASICs, currently running programs to complete mathematical calculations to secure the Bitcoin network and confirm transactions. The reward for doing this job is that they get paid in brand new minted Bitcoins. The amount of power required to do this is measured in hash rate, which show us the true processing power of the network. The full node operator validates the transactions and the blocks. They also provide assistance to the Bitcoin network by accepting transactions and blocks from other node operators, validate these blocks and transactions and sending them to more full nodes, further securing the network. I mentioned Bitcoin use proof of work earlier, and this is exactly what is securing this. Proof of work is a consensus mechanism that requires members of a network to spend effort solving a mathematical puzzle to prevent anybody from undermining the system. This prevents other people from undoing or rearranging your bitcoins. This is essentially an ongoing trust test. This is used for validating transactions and creating new bitcoins. This is solely allows the peer-to-peer transaction to occur without the need for a third-party verification. Proof of work requires energy, which only increases as more miners join the network. This is the incentive that keeps the system trustworthy. This protocol is an open source software, and that means anyone can download it and use it. So how is all this actually valuable? Let's take a look. Features. Bitcoin is a peer-to-peer electronic currency with a finite supply. More important, it brings sovereignty to the individual over legacy financial system. You're operating outside of the banks, so you become your own bank. It is permissionless and borderless because anyone can use it when they want to use it. It is censorship resistant, so no one can freeze or prevent anyone from sending a transaction. It is fast, you do not have to wait for intermediaries, and the transaction on the second layer Lightning Network can move at the speed of light. It is cheap and fees are low to send bitcoins. It is highly secure and takes up minimal space. It is no counter risk to it. Once you store your keys and wallet intelligently and your transaction is confirmed, you are all set. So what about the monetary value? Bitcoin is a scarce asset. The current supply is around 90 million Bitcoin and there are only 10% left to be mined. There will never be more than 21 million Bitcoins ever, unlike gold and fiat. The issue schedule, which is reduced every 4 years from halving cycle every 4 years, the amount of Bitcoin produced is cut in half. This cut the amount issued per block in half. We are now at 6.125 Bitcoin per block, and the next halving is in 2024. This means it was made to be a scarce asset. There is only ever going to be a certain amount of it. Long-term and new Bitcoin holders are moving their Bitcoin off the exchanges into their personal wallets and holding it. You can see that now that centralized exchanges like Binance or Coinbase, where they only let you withdraw a certain amount. That means supply and demand. Bitcoin is a store of value and it cannot be printed or debased like the example US dollar. If you consider the bond market, you get a negative yield from it. People keep their money there and they are losing it. Bitcoin's store of value characteristics should play as a competition to this once people start thinking. Bitcoin market cap is currently around 800 billion US dollar. Institutions are also buying this asset as a hedge against inflation. High net worth clients at large bank want this asset, or generation prefer this as they support the ongoing wave of dematerialization that is occurring. So there are still a necessary mental framework you must adopt in order to really understand what Bitcoin is. And I bet you have seen the prices fluctuating a lot in Bitcoins. And does that actually mean that you lost money? I want to say 1 Bitcoin is always equal 1 Bitcoin. You will need to understand that and wrap your head around that from this point and forward. Think long and hard about what I will be saying right now, okay? Fiat currency is used every day to purchase goods and service. You might have some for a rainy day or a sudden expense. The problem about fiat is that it's constantly being inflated. Ever since 1971, this problem has been persisting. And since 2008, it has become even worse and worse per year. The money supply has been dramatically increasing, and $1, €1, or whatever currency is becoming more worthless as time goes by. Hopefully, you are aware of this problem. The problem that your cost of living are rising constantly. When the states say it's transitionary, they are outright lying and smooth talking it to make it sound pleasant. Inflation is never going away. It will not stay at this rate, of course. However, everything has changed. The fiat currency price action, the day-to-day price movement, is not something to focus on. 1 Bitcoin is always 1 Bitcoin, okay? This is not about making more fiat trash tokens. You want to stay away from the mindset of this, as this will be the tip of the iceberg. You want to make more fiat to buy more assets. Buying Bitcoins or Google shares to earn more fiat is a thinking small, okay? You're taking part of getting involved in a revolutionary change in finance and technology. This is so much bigger than trading for diluted fiat trash tokens. When I have the ability to transact in a currency that cannot be diluted or debased in a matter of a few electronic entries on a central bank's balance sheet, it is fully backed by code and I can take it anywhere I want to take it. I can transact and use it whenever I want to use it, 24/7, 365. All knowing that this is programmed to be scarce. Why wouldn't I?